Hi, fellow traders. I hope everybody had a good day today. It was another good day. I'm pretty pleased with the volatility that's come back into the market. It's just what I was looking for this first week in August. Now, Monday seemed a little bit sketchy, but I really should have made money Monday. I just gave it back. I made it and then I ended up giving it back, or 3/4 of it back. But Monday was a good day, Tuesday, today. So I'm really pleased and pumped up about the rest of this quarter and the fourth quarter. So what I'm gonna do today is a little bit different. I've been asked to do a class on my pre-market trading, and it's really not enough to do a class. So the easiest thing to do is just do a quick video kind of going over my thoughts about pre-market trading. And I say it's the average Joe way because this is what I do. It's just a drop in the bucket as to what you could do in pre-market. The possibilities are probably limitless. But if you know me, I like to keep things simple. I like to use the KISS method, keep it simple, stupid. The less moving parts that I have, the more consistent I can be. And so I take that mentality, into my pre-market trading. So I'm going to spend the next few minutes kind of talking to you about how I look at pre-market trading and a couple examples of the strategies that I use. All right, so let's get right to it. One of the questions I get a lot is, when does pre-market start? So, we take it for granted that everybody knows when the market starts, but not everybody really knows or understands when the pre-market starts. I know when I first started trading, it was a mystery to me. But pre-market trading occurs before 9:30, before the market opens up for regular hours. For me personally, my pre-market starts at 8 o'clock. That's when I'm allowed to trade. Short trader, speed trader, that's when I'm allowed to trade, 8 o'clock. And I like to trade pre-market because it helps me get a leg up. I get a good start to my day. If you follow the rules, if I follow my strategy and do the things I'm supposed to do, I can have a good start to my day. Now, on the opposite side of it, if I get a little bit careless, then I can easily blow up before the day even starts. And I don't want to do that. But to be honest with you, lately, pre-market has been where I've been able to get the cleanest price action. It's trading on lower volume, but the price action has actually been cleaner. I've had awesome pre-market trades every day this week except for yesterday. I tried to trade Apple pre-market, but it was a little bit heavy. I have more people trading it than I anticipated, and it moved more like it did during regular market hours. So, yesterday was a small loss. But one thing I do in pre-market is I do trade small because, I am concerned about that. But I like it because it can just get me off to a good start. I can start getting the pulse of a stock early. And like today, I can just lock in on it and for the most part be in tune with it all day. Now, of course, there are risks that come with any part of trading, but there's a little bit more risk involved trading after hours and pre-market. Sometimes you can't see or act upon the quotes that you do see. There's lack of liquidity sometimes. During regular trading hours, buyers and sellers can trade readily with one another. During pre-market, there may be less trading volume for some stocks. Some stocks won't even start trading until the open. And it makes it more difficult to execute some of your trades. You also experience larger spreads. Less activity, lower volume can mean wider spreads between the bid and the ask. So that's something you have to, get used to. So because of that, you may find it difficult to get your orders executed or to get as good a price as you would have been able to do had it been trading during regular market hours and you got more volume there. So price volatility. For stocks with limited trading activity, you may find greater price fluctuation to go along with the larger spread. And one stock comes to mind today, that we traded later in the day was CRUS. And, it had a reversal, decent reversal, and then we caught it on the backside, continuing the downward trend. And this stock traded very little volume. It traded less than 30,000 shares every 5-minute candle. And we saw pretty big price swings on it. And that's what happens pre-market. So because I'm used to trading this pre-market, day trading these lower volume stocks, I can deal with it. I can deal with the price swings. And I'm in small enough size to where I don't have to worry about being able to get in and get out. And that's where being in small size in pre-market comes into play, because you can deal with a lot of these risks a lot better. Another thing, you can only use limit orders. So most trading systems, they only accept limit orders in pre-market and aftermarket. And limit orders a lot of times can cause you to miss out on getting a trade filled. Now, you can use hotkeys, which I've had nothing but bad luck with. But hotkeys can help you out if you have it, put a limit order on the bid or the ask, depending on what you want to hit. That works great. But if you're in pre-market and the stock starts to get away from you and it just keeps moving up, and you have to try to type in a limit order, you might have trouble getting filled. And that's happened to me before, but that's part of the risk that I accept. And I say competition with professional traders, because most of the pre-market traders are professionals with large institutions, mutual funds. Not only do they have a hell of a lot more money than we do, they have access to more information than we do. They're able to hide their orders, and do some things that we're unable to do. So we're going head to head, I guess, with them more so in pre-market than we do, during the trading day. Then you may have computer delays. You may encounter pre-market delays or failures of getting your order executed. Sometimes the exchanges may be having issues pre-market and you can't even trade at all. So, all of these things are you have to accept when you trade pre-market. And for a long time, I was terrified of trading it. I did not want to trade pre-market because I heard all of the horror stories and everything. But once I got to the point where I was comfortable and I felt that I understood how stocks move, what makes the market move, then I was able to deal with these things. It's just like with the 5-cent tick stocks. There was a long time where I would not trade 5-cent tick stock. Now I don't have an issue with it because I've become comfortable with them. And, you know, pre-market trading is the same way. You just can't jump in with both feet. You kind of have to ease yourself in so that you can get comfortable trading pre-market. So, in conclusion, if you're looking for an edge in your stock trading, you know, trading in pre-market can be a good place to start. I mean, for me, what I noticed over the last couple of months is that pre-market and the open are the strongest times for me. After 10:30 or 11, I tend to give money back. And it's been a cycle for the last several months. So now I decided that I'm only going to trade pre-market and the open. I'm going to leave the middle of the day alone. And I'm going to trade at the end of the day. And you saw me do that today and yesterday. So just make sure that you are aware of the risk and that you accept them before you start trading pre-market. So now let's look at the one strategy that I do trade pre-market, and it's the VWAP strategy, basically. And sometimes I have to adapt it to the 9 or the 20, but for the most part, I'm waiting for a stock to test VWAP, either fail it, test it, do whatever it takes, and I could get in. So this is UA. I forgot what day this was. The other is this week. And I'm in the middle of a trade here. I just happened to take a screenshot, but I wasn't able to take a screenshot at the end. But I wanted to take a screenshot of what I was looking at pre-market. So we had to run up. We had to sell off on earnings. We had this strong push up, which was amazing, right back up to red to green line, and then we rolled over. So yeah, I probably could have jumped in up here, but that's not a strategy. I waited until I could have something to gauge my risk off of pre-market that makes sense. The red to green line here didn't make sense for me to risk off of, especially with the VWAP here. Had I shorted up here, it would have been like me shorting in the VWAP, which is a definite rule that I have. So I waited till we got through it. I shorted it. Yes, we're on top of the 200, which is this white line here. This is the 200 from the 5-minute. But pre-market, this 200 rarely comes into play. So it wasn't even a thought. I got in, got my first cover down here. We started to make a move. I was looking for this level here, but we couldn't get it. We bounced back, got out break even, waited for the rejection again. Again, I could have taken it here, but now once we have traded through and back above the 20, it tends to come into play. So what I did was I waited until we got below the 20 and the 9. I got in. We had a little push back up to the 200. Then we had to sell off to this level. And then we had to sell off. You know, then I covered some here. So this was a pretty good trade. Now, what I did do was I left 50 shares on to see if we were going to get here. And what I did was I left it on through open, and I put in a hard stop so that at the open, if it started to run away from me, it would take me out at break even. But if it worked, I could, you know, bank some more profit on it. And it did, it worked. But what I like to do pre-market is look for the VWAP rejections. If we have a stock that sells off, and these are the ones that I like the most. I like the ones that sell off, that have bad earnings. or that's having bad news and they sell off and they bounce back into VWAP and then reject. This was a unique situation in that it went all the way back up before we came back and we start rejecting VWAP. But either way, you know, this was a solid trade. I nailed it. I think I got a little over $250, almost $300 on everything. So was pretty pleased with that. And and I see these setups almost every day. Now, they don't happen every day, but almost every day I see them. I don't get to trade them all the time because starting, you know, at 8 o'clock, I'm making my breakfast, making my coffee, I'm doing things, and I'm looking at this on a tablet. So, you know, it's kind of hard to really get my groove going. So sometimes I miss them, but you have to be disciplined. If you can't nail the right setup, and you nail it when you're supposed to, then you're going to have issues. And the trade's probably not going to go your way. So you have to be disciplined, and that's what I've been doing, is exercising discipline here. Let's see. And here's a trade from the day. We started with Teva. And unfortunately, Teva made the move that I really like to get at 7:30. This is the ideal setup. And I tend to see these at 8 o'clock. But this stock made it at 7:30. You know, we opened up at 6:30 and we had the sell-off. We pulled back, kind of tested VWAP and rejected it, came back and tested it again. And here's where I like to get in. But it was 7:30 and I can't trade pre-market until 8 o'clock. My broker will not open it up for me to trade until 8. So by 8 o'clock, we were already down here. So what I had to do was wait for the bounce. And typically we do get a bounce. Normally we get the bounce starts at 8:30 after the move. But, you know, the timing was a little bit off. So I anticipated this rejection. You can see I got in a little bit early. I anticipated it. And I got in, you know, got a cover here, got a cover here. And, you know, almost got it. I was looking for the pre-market low here to get all out. But typically I like to be all out by the time the market opens. On rare occasions, like on UA the other day, I kept 50 shares on and waited for the flush at the open. But typically, this is what I like to do. It didn't quite make it back to the VWAP, but me getting in here and allowing enough room for me to test VWAP if I had to. Now, had it gone up here and tested it, I probably would have added a little bit more shares. I probably would have added another 100 to 150 shares and worked it out that way. But, you know, and this is why I get in early sometimes, because this doesn't always go back to VWAP. Sometimes it turns at the 9 and we get to move down. So that's another thing that you have to look out for. So just to recover, you know, to cover everything, this is a perfect example of both the strategies that I use. And they're all rejections. I look for the sell-off, the bounce in the VWAP. I always like to wait for a retest. Okay, I like it to bounce, then go back and retest it again. That's when I usually get the strong moves. So this definitely would have been a trade I took had it been an hour later or 30 minutes later. I would have jumped all on this. But here's the bounce back into resistance, the moving average resistance. And I got short, anticipating the rollover. Just in case we didn't get to the VWAP, I was going to be in. If we went to the VWAP, I was going to add a little bit, but we didn't. And you take profits at significant points along the way. This was, let's see, the $half mark. Yeah, $half mark was the first target. No, we were breaking down to 52-week lows, so I didn't have any levels to go off of. So 50 cents, and then I got the $quarter mark. I took some at 25, and let's see, and then 25.85. I got some through 25 right here, which was, I waited till we broke through the lower pre-market. At the time, now this was a lower pre-market. I waited for it to break through that, and I took it. And that was my pre-market trade. And then I waited until the open in order to trade this. And this I took on the opening range breakdown. I really should have got it up here, but I missed it. I was looking for this, and I mentioned this in chat that I was waiting for it to pop up and reject that VWAP. I was going to jump in short early, but I missed it. Ended up having to get in here, which was still, you know, I could risk off the 9, and got a little bit out of this, and then got in it again, and just kind of worked it down from there. So I ended up making over $400 on this stock today, trading small size, and you know, made another 100 or 150 or so, I don't even know, on CRUS. But you know, it's real simple. All you have to do is make sure you have rules that you follow, that you don't, you know, get in without understanding where your risk is and what your risk is, and just paying attention to the price action. Now, you know, what stocks qualify for this? You know, I kind of forgot to mention that earlier. The stocks that qualify for these trades are the ones that hit my scan. I have an opening range breakout pre-market scan, and these stocks have to hit that scan in order for me to take it, because that means I've got the gap, I've got the volume. It has to have traded at least 50,000 shares of volume pre-market. It's got to have over a 50-cent average true range, which doesn't really matter here. But what it does is it means it's easier for me to get the move that I want when I know a stock has range. And you know, it's got to be within my price parameters, obviously. Now, I will take stocks off of my regular gapper scan, but you know, this, like for instance, Teva had a big float, so this wouldn't hit my pre-market opening range scan. This would hit my pre-market gapper scan, and that's where I got Teva from that scan. Like UVA hit my other scan, the one that I normally use. But the key is, it's got to have volume. I've got to like the price. It's got to be smooth price action. Look at this. This is beautiful price action. This is what we want to see when the market opens. Look at what happened when the market opens. Look at that crap. You know, who wants to trade that? I take this any day. And if I have to get in pre-market to do it, then that's what I'm going to do. And until it starts kicking me, I'm going to ride the horse until I get bucked off. Put it that way. So until this pre-market horse bucks me off, I'm going to keep riding it. And as long as these moves look as pretty as this, look at this, I'm going to take it. And you know, bank some profits. So hopefully I covered everything and I answered all of your questions. If I didn't, feel free to shoot me an email Ed at AverageJoeTrader.com, and I'll be glad to answer any questions that you have or try to point you in the right direction anyway. Alright, so that's going to do it for me today. It's been a fun week. I've enjoyed the people who are visiting on the free chat week that we had this week. You know, you guys took advantage of it. You listened, you watched my video Sunday. You took advantage of it. Hopefully you guys will take advantage of the special that I had for you. So we'll see. That'll be exciting as well. So everybody have a great evening, a great night, and let's look forward to a prosperous and green Friday.